Newer traders tend to, throw mud at a wall until something sticks. And then they just think like, because that trade worked, that's their edge and they'll just keep doing that. But you got to have the data that tells you there's an actual statistical edge.
Welcome to another episode of Tradervue Conversations, a podcast done with real traders sharing their knowledge and experiences. I'm your host, Richard Dalder, and I hope you enjoyed this conversation. Hello, Ricky. Welcome to the first edition of Tradervue Conversations. We're happy to have you here. How's it going? How are you?
I'm good, man. Nice to talk to another Ricky.
Yeah, thank you for being here. It's such a pleasure. And so let's kick it off. Tell us a little bit more about yourself. How did you start trading and what markets do you currently trade?
I've been trading about 9 years. I started in late 2012, early 2013, actually, during the first pot stock craze, and learned about Twitter and FinTwit, and learned how you could follow people's alerts on Twitter, and realized real fast that that's not the way to profitability. Took some bumps and bruises, got back up on the horse, figured out what I needed to change. Probably same things that a lot of newer traders probably struggle with, like learning the hard way that risk management is a real thing. I've been profitable for, I would say, about 7 of those years, 7 of the last 9. So knock on wood, barring anything crazy happens, honestly, that's one of the great things about, developing what I would consider bulletproof risk management, is that I sleep well at night. I know, worst case scenario is, taking a manageable loss and moving on and being okay with it. So now I'm primarily an equities trader. I trade my own account. It's very systematic what I do, even though I execute with discretion. I moderate over at truetrader.net, which is a kind of like a trading community. We kind of like to think of ourselves as more of like a mentorship community where people can kind of come and find somebody that will, actually take them under their wing and mentor them. It's not an alert service or anything like that. And so, I trade pretty much the first 30 minutes of every morning I'm out in the West Coast. I trade from about 6:30 till about 7 a.m. I spend about the next 30 minutes so we live stream over our community. So I'll live stream my trades, and then I'll spend about 30 minutes chatting on Zoom with the community and going over questions, things like that. And then I like to, bugger off and enjoy my life. I play a lot of golf. I've got 3 kids, so I do a lot of things with them when they're not in school or daycare and stuff like that. So I'm not sure if I forgot to cover anything right there, but that's me in a gist.
No, thank you for that summary. And so let's get a little bit deeper into how you trade. So you did mention that you're focusing more on the opening session, so the first 30 minutes. Also, you did mention that you're trading mostly equities, correct me if I'm wrong, and also that you execute in a very systematic fashion, but take into account a lot of discretion. So walk us through a little bit on how a trade looks for you in terms of time frame. What is it that you're looking for? Walk us through a little bit through your edge, if that's okay.
Yeah, sure. So I primarily trade mid to large caps. I do trade a lot of small caps, but as of lately, actually one of the benefits I think to being a large cap trader that also trades small caps is it gives you the ability to, instead of trading like small caps every day and just looking for, what's going to be the hot play, I actually have the ability to say, I can sit on my hands and look for those 3 or 4 really, really A++ opportunities every year in the small cap world. And I can still trade on a regular basis, trading the large caps. So the large caps that I trade have certain minimum requirements they need to meet. I have to, they have to trade enough liquidity. Typically, I don't look at anything trading less than 2 million shares on average per day. I need range. I need at least $1.50 of ATR, typically. Depending on the price range of the stock. I'll make an exception for a $15 to $20 stock. If it has $1 ATR, there's probably still some money to be made there. From there, I'm looking at what had a catalyst either that morning or the night before, might have a small gap up or down, and has very obvious key levels on the daily chart that I'm looking for it to make an emotional move into it, whether that's a spike or a flush off the open. And I'm typically executing mean reversion trades. Now, they're not always. So basically, this is one of the things we teach over at True Trader is just this basic reversal strategy based on capitalizing on unsustainable momentum in the market. So, why is it so good for the first 30 minutes? Well, because that's the price discovery phase. You got market on open orders from all kinds of large institutions. You've got people that, it's a giant auction, right? So people are really trying to establish what is fair value for this underlying equity for the day. And so even though maybe, like, I think a good example would be this morning. Today is like what, the 16th of May. So one of the trades I had this morning was I shorted ZIM on the opening rip into some levels, and I took my slice of it, I think about a point on a $60 stock. So, a decent gain, and come back at the end of the day after playing some golf and I see it, and it actually was higher than where I had ever shorted it, right? That's not what I care about. What I care about is that the move that it is currently making is not going to be sustainable. It doesn't mean it can't go higher, but it's going to need to take a breather most likely first. And so that's what we're capitalizing on. Again, there are different nuances to it. So there'll be situations where something may rip off the open, and instead of, if the daily chart is screaming that it's a bullish looking setup, instead of shorting that, I may actually wait for an emotional flush back into some levels where I feel more comfortable buying that equity. So there are some nuances to it and different setups within the strategy that I trade. But that's pretty much the basics of it.
Okay, nice. That sounds super interesting. And about your time frame. So how, like on average, how long would you say you hold the trade usually?
If it's these reversal strategy trades, these are typically no more than 5 minutes, oftentimes like 2 to 3, sometimes even quicker. A lot of times, if you're right about your thesis, usually it pretty quick. Usually you get, like, let's say I'm shorting something that's ripping into a level. If I'm right, a lot of the times I get that really knee-jerk reaction almost immediately. Like, if I'm timing it correctly, the buying should be exhausting and the seller should be stepping in. And so it's oftentimes pretty fast.
Okay, no, that's really interesting. And sounds like very short term.
Yeah.
and so yeah, so let's go a little bit through let's go a little bit deeper into your learning curve. So you did mention that at the beginning you were exposed to kind of the FinTwit world, or the financial Twitter space. And so what was the reason why you quickly find out that was not going to work for you, and like what actually changed in your approach that actually took you to where you're at right now?
Well, when I first started, I didn't really know what shorting even was. And I was, a lot of the stocks I was kind of messing with were OTC. It's funny. I think the first pot stock boom didn't have a lot of big board listed companies. It was mostly on the OTC. Obviously that's changed now with marijuana laws being, changing. But, I watched my account really early on just get cut in half within like 2 months, maybe. Just bought the top on everything. And it was pretty obvious that what I was doing was not sustainable. I actually, for lack of a better description, like a lot of people just suck at picking themselves back up when they get beat up like that. For me, I look at those types of situations as like a challenge, and honestly, it's what I love about the market. If it was really easy to do, one, it wouldn't be nearly as profitable as it is, and two, everybody would do it, right? So I actually love the challenge. I love trying to solve these puzzles. So I did a lot of homework, did a lot of research, started educating myself as much as I could. And, I did learn about shorting. I did find some early success shorting small caps on these things that would gap up large, have a big parabolic move. And The problem with that is if you do not understand how to manage your risk, it will expose that, and it might not happen right away. So for me, I actually had quite a bit of success, and I think probably also got a bit of an ego from, sometimes you think that your P&L is telling you that you're like God's gift to the market, but the market's like setting you up for an ultimate fail. And so that kind of happened. I had a little too much size a little too early on a name that really took me down a few notches. And it was at that point where I met, I think, probably my first mentor, who was a guy named JM. He goes by All Day Holds on Twitter. Great guy, good friend of mine. And he was one of the first people to actually teach me about risk management. And, once I learned that, that was where, a lot of aha moments happen. A lot of, a lot of fears can get laid to rest. Like if you don't really understand risk management, every trade you put on has this extra level of anxiety or stress, because just not quite sure, like, is this the one that's gonna like destroy me, or am I gonna make it out of this okay? So once you kind of learn the basics of risk management, you can kind of get around that curve, but it still takes a little bit of experience and time to develop your risk management to a point where you actually can feel at ease when you trade. At least for me. I guess I can't really speak for everybody, but I do work with a lot of traders, and I do like, that's what we work on the most is risk management, and trying to get people to a realization that, like, when you put a trade on, the outcome of the trade really needs to be already accepted, whether it's a win or a loss, and the ability to just be at peace with it. And I think a lot of newer traders really struggle with that.
Yeah, no, it does make a lot of sense, and I do agree with you. Risk management is just one of the fundamental parts in trading. It has to be there. It has to be solid enough if you want to survive and be able to make it, right? And so, Reggie, which that's really interesting. So, talk to me a little bit more about how you manage risk when it comes to your trading, your account, your position sizing. Like, a lot of traders have different ways of managing risk, and it does, it's going to be a lot of according to their strategy and how they trade also. So walk us through how you manage risk when you trade.
Okay, so basically for me, let's just go through an example of a long setup off the open. So if something is gapping down and flushing into really key levels, and I want to buy that stock, I already know I have black and white targets for where I'm going to take my profits. Personally, one, in order to actually see an emotional move, I do have to drill into some of the lower time frames. So I will be using a 1 minute chart off the open, in order, not because I want to trade off a 1 minute chart, but because the 1 minute chart is going to show you how fast the move is happening. And what I typically use is the 1 minute 20 SMA. And, in order for a stock to move far, far away from that SMA, it really has to move fast. And that's why I have to use that time frame. Like if you look at a 5 minute chart, that same move will not peel away from the 5 minute 20 at the same rate. So basically that's what I'm looking for, is the rate of change, or the acceleration of the price. So I know from just back testing tons of stocks that stocks tend to trend on the 1 minute 20. So for me, part of my job is to identify, I'm not going to get the top or the bottom, and I don't want it, but I want to make sure that I'm using rational, objective targets. So it makes complete sense to use that 1 minute 20 as my profit target. So if something's flushing off the open and pulling away from that, I automatically it doesn't take me long to do the math in my head, but I actually have hotkeys with my system that do it all for me. I can take a look at it and go, we're 2 points from the 1 minute 20. And I can see the daily level. I know where I kind of want to put this trade on and where I'm risking against. So it really just becomes a point of how much size can I get on where my risk is the same. And the closer I am to a level where I know I'm going to be wrong, I can put that trade on, and it's as asymmetric as it comes. I'm wrong a lot, and that's another thing that's a lot of traders probably should stop worrying about. I bat about 40%, and I'm completely fine with that. The cool thing about batting 40% is, like, every single time I put on a trade, I go in there with the assumption that I'm going to be wrong. It's fine. So when they work, it's great because I have a shit ton of size. Sorry if I'm not sure if I can use that word on this. I have a lot of size because I'm trying to get the most asymmetric trade possible. And, whether or not you agree with me or not, you'll see some people that like to add into that or build into that position. I personally don't like to build into a position because when I'm right, I want to be right with my full size. And when I'm wrong, I already know my risk. So my hotkeys will put me in. If I buy something flushing emotionally into a level, I'll hit the hotkey, puts me in. I know where my risk is at least giving me 2-1 from my starting point. And, typically I'm getting better than 2-1. A lot of times these trades are so asymmetric, they're in the 3-1, 4-1 realm. And if they work, they start working quick, right? And the thing is I try to get this through to a lot of traders I work with. The more asymmetric a trade is, the less I care whether I stop out or not, because as long as I continue to just hunt for those really, really asymmetric opportunities, I can be wrong a lot. And I already know just from back testing all the data that it's fine. I'm going to be right about 40-45% of the time. And I mean, the expectancy on that with that kind of risk reward is phenomenal.
Yeah, no, that's really interesting. It makes a lot of sense. And so a few things that you did mention. So you don't scale in and scale out. You're like one full in and then you're one full out if it gets stopped or to your target.
No, I'll scale out. I just don't like scaling in. So like, I'll have my first targets and then there's secondary targets and so forth. But I just don't like to scale in. It's way too easy to scale into something going against you. And we all know how that can end. And when you're trying, my opinion is this: if you're trying to execute what I'm trying to do, like I said, it should work rather quick. It becomes actually really hard to scale into a winner if it's going to have such a quick move, right? We're talking the course of 2 to 3 minutes. This is either going to work or it's probably not going to work, right? Now, I have other strategies I trade where I will join trend. And whenever I'm joining trend or I'm looking for confirmation, I will start with a partial position and I will add to a winner in those situations. But like, to be honest with you, lately I'm so more focused on just trying to be in, out, done within 30 minutes and enjoy my life. Because, I'm making the majority of my money in that opening 30 minutes. I can sit there for another 30 minutes, another hour, another 2 hours. And then it just becomes like, one, I might make a little more money, but it's probably marginal. Two, I might actually give back some of my money and I'm not cool with that. And three, what's the opportunity cost of sitting here, especially if I give back some of my money, right? Like there's a lot of other things I can be doing with my life than sitting here staring at charts. And I trade so that I can have the life I want to have. I don't live to trade. Like I see too many people I feel are just maybe addicted to it, or they're just, just so locked in on the charts all day. And I've been there, I've done that. I used to do that and it's not fun. You get done your work day and you just feel super exhausted. I mean, I think they've done psychological studies on like how long your brain can actually fire at top performance when you're making fast-paced, important decisions. And it's not much more than 30 minutes. That doesn't mean you have to focus on the opening 30 minutes. Maybe you're a trader that trades better from 10 a.m. till 10:30. That's still going to give you that 30-minute window where your brain's kind of like on point, but maybe you can sit out that price discovery phase if you're looking to join trend, right? Once the market kind of settles down. But again, like I don't really think I need to be sitting in front of my screens for hours a day.
Yeah, I do agree with that. And yeah, no, it sounds like a great way of approaching the markets. It sounds like you get more bang for your buck just for sitting at 30 minutes right at the open. And I'm pretty sure that goes along with your personality maybe, and also on how you approach the markets. And so you did mention, let's talk a little bit about edge and finding your strategy. I think that's a very interesting topic. And you did mention a couple times about like back testing and like having conviction on how you trade and what you trade exactly. So if you could tell us a little bit more about how you came into finding your edge and how you actually got that level of conviction. Because correct me if I'm wrong, but you need a level of conviction to put the full size on, right away, and also in a short term, time frame, if you will.
Yeah, 100%. And I actually spoke about that this weekend with a bunch of guys talking about newer traders tend to, throw mud at a wall until something sticks, and then they just think like because that trade worked that's their edge, and they'll just keep doing that. But you got to have the data that tells you there's an actual statistical edge. So there's multiple ways you can do it. When I was, first starting out tracking data, it was all manual, Excel sheet, looking for any stock that, looking for stocks that fit a criteria, like a certain setup I was trying to track. And then I would collect data points on everything you could imagine about that stock, whether it's the float, the OS, the volume it traded that day, the time of day it made its high day, the time of day it made its low day. Lots of data points that many people might even not think are important. I would collect them because you can't disregard that data point until you know for certain that it doesn't have a correlation to a positive outcome. So there's a company that came out a few years ago, Spike Heat. I use them, and it's a great product. They allow you to kind of do all that manual work at the push of a button. You just have to set up these data polls. They have historical tick data going back decades. Literally, like you could go back, I think 20 or 30 years and pull data on things that meet your criteria. So that made the tedious task of doing it manually obsolete. And a lot of people, still do it manually. I wish they would like realize that, put a price on your time and your work smarter, not harder. But I'm not gonna lie, the setups that I'm trading now with these emotional moves off the open, there's certain things I can't pull data for using their company because they're still developing these different indicators that we can use. So for that, I have been tracking that data manually for quite a while. And in fact, like I'm staring at the spreadsheet right now before we hopped on this call. That's what I was working on. And it's just something that, it only takes me at most 20-30 minutes at the end of my day anymore, because I only track the data for the opening 30 minutes, and I'm only looking for candidates that made a certain type of move into certain levels. So on average, there's about 10 to 12 of these stocks per day in the opening 30 minutes. Doesn't mean it's every day, but on average there's about 10 to 12 of them. If it's not earnings season, it could be 2 or 3. If it's earnings season, it could be like 20, right? You get a lot more volatility. You got a lot of things moving with range. And so, if there's only 6 or 7 of these things, I just got to throw them in my spreadsheet, pull the certain data points on those. And then it just, I've got a lot of formulas set up in there that do a lot of the work for me. And I just keep a pulse on the market so that I know if this setup were to stop working for whatever reason, I'll probably be the first to know because the data is going to tell me. The good thing is that I don't think it'll ever stop working. It's literally based on psychology, right? It's based on, if I see something ripping off the open and I'm looking to fade it, I remember the feeling of being on the other side of that trade, and you're the guy that kind of FOMOs into the trade. You're like, oh crap, I'm going to miss this long. And you rush in to buy it at the top. And you get, as soon as you put that trade on, you have that feeling in your head. You're like, oh, I did it again. Like I chased it. Well, now those are the people on the other side of my trade. And so like, that's exactly who I want on the other side. And that fundamental underlying psychological background is why I don't foresee this ever to stop working, right? I mean, markets have been markets forever because of human behavior.
Mm-hmm. Yeah, and so correct me if I'm wrong, but so you have like you have data collected in a spreadsheet, which is some sort of a collection of quantitative data, if you will, but you're using a systematic approach, and also you're using a touch of discretion. I'm guessing you use the tape also to execute, like when getting in or scaling out. Correct me if I'm wrong.
So basically I have my spreadsheet set up so that I can change certain parameters and see how it affects outcomes, right? Such as how much risk I'm willing to give something, not in terms of like dollar risk, but in terms of like how much wiggle room am I willing to give something. You know, sizing, position sizing is all systematic, especially with the tracking. Like I'm not trying to force growth. There are times when a setup will be justifying a larger position size, but that, you know, I don't recommend that for newer traders. I think that comes with time. But one of the coolest things I was able to like glean from the data was the tighter I had my risk, obviously, the more often I would stop out. But the P&L curve went like parabolic. And it was from that, it was from trades becoming more asymmetric. And you could win less often and make more money. It was like the best aha moment ever.
Wow. No, that's really cool, especially you getting that information from the data you're collecting. And so you did mention that you will be the first one to know if your edge for some reason would be changing or disappearing on the market. Market will be changing, and therefore your edge will be like evolving, if you will. And so I think we can both agree that recently, like recent market conditions have been changing a lot, especially after December and all this inflationary situation, geopolitical stuff going on. Not gonna get too much into detail there. So some traders are struggling because of that. You know, some people are having to adapt. Some people are having just not getting in touch with the market anymore, or you know, especially coming from the COVID situation, which you know there were a bunch of new volume. So what's your take on adapting to times where markets are changing, your strategy might go out of style? Like how would you approach that as a professional trader?
Great question. A few things. It's not that I don't have long-term accounts. I do. One of the most important things I think you can learn to do as a trader or an investor, doesn't really matter what your time frame is understand how to read trends. Like what is a stock doing? And I know it sounds really simple and rudimentary, but you know, we had a 13-year bull run where, I mean, I remember guys on Twitter calling the top every freaking week for 13 years. And there was just a trail of dead bodies all the way up from the bears that didn't want to acknowledge this is the market's making higher highs and higher lows. Well, guess what? It's now making lower highs and lower lows. It's in a downtrend. And now everybody's trying to call the bottom. It's the exact same thing in reverse. And, you know, it really just comes back to, can we remain objective and rational about what we're seeing? And if you're a long-term investor, especially if you're only able to trade on the long side, you have to look at the market and go, this isn't the conditions for that. Doesn't mean they won't return, but you got to be patient. And, you know, I talk with a lot of like guys that'll host like these really big Twitter spaces, some guys with some big followings, you know, and we all kind of laugh about it. Just like people will say this all the time, be patient, be patient. You got to know what you're being patient for. If you're a long-term trader, wait for the market to go back into an uptrend. It's really as simple as that. Maybe not even just on a daily chart. Maybe you just wait for the ES or the NQ to start making higher lows and higher highs on a weekly chart. So you can zoom out, remove some of the noise. So it's not like I'm not, you know, I'm sitting on a lot of cash and I'm sitting on my hands when it comes to those types of situations. But that's another reason why I just absolutely love being able to trade that price discovery time frame of the day, first 30 minutes. And while a lot of people are struggling, I'm able to make my money and then go enjoy my life. And it's funny, I come back at the end of the day, I'll see the market and I'm like, dude, I'm so happy I walked away. Like like you could be up 500 points and come back and you're down 300 points negative on the day on the market. And you're just like, I don't want to guess that. I'm not trying to play guessing games and get chopped to death. I'd rather just know where I have an edge, which is whenever there's an emotional move that's not going to be sustainable, I'll take my piece of that pie and then I'm going to go live my life. But like if you're, you know, if that's, I work with a lot of guys that they started in 2020. They started in 2021. You know, all they know is buy the dip. You buy something. If it goes lower, you can just wait, or you can add more. And then a few weeks later, it's like magic. You make money. And those are the people that are really struggling because they haven't ever experienced this shift in the market. And, you know, again, if you could just circle back around to like learning how to just read the trend and learn how timeframes work together, and just understand, like, this is not the time to buy the dip. It's actually the opposite, right? Like, a lot of people might benefit from just flipping their charts upside down.
Yeah, I like it. I like it. And so let's get a little bit into the trader mindset, or a little bit more into the psychological aspect. What do you do, Ricky, in a daily basis to improve as a trader? Do you have like any sort of like personal system, or like something that is trading related that actually makes you be like like have the clarity, you know, that clarity that you need in order to trade?
Yeah, a lot of it, I mean, it's not so much, I mean, definitely I'm always trying to improve, trying to get better, but a lot of it just makes, or is focused on me making sure that I show up 100% in the morning. So that means, you know, going to bed at the right time, getting a good night's sleep, waking up early. And, you know, I'm very routine based, like, honestly, almost to the point of it being OCD, as if, like, you know, I have a routine where I wake up at a certain time, I turn on the screens, I go make coffee, and then I listen to the news, and I sit and, you know, do some things. And like, literally, if something is off about the way I make my coffee, I'm just like already in my head going like, oh man, something's not right. Like, it's just my routine has to be done a certain way. After that, it's just about making sure that I have my game plan. Sometimes I will do kind of like a, you know, a little internal dialogue where I'm like, systems check, like, am I, you know, emotionally ready for the day? I'll tell you one thing, systematizing my strategy or my setups removed a lot of the issues caused by that, or probably they're experienced by discretionary traders, right? Like, I don't care if my idea is right or wrong, because it's not my idea. It's just my system. So like, I really always kind of liken it to The Simpsons, where you have Homer Simpson, who is by all means not smart enough to make decisions about nuclear power, right? Yeah, he works at the nuclear power plant. And like, if this red button lights up, he's supposed to hit the button, right? That's me. I'm not smart enough to make big time decisions about what's happening in the stock market. There's analysts and big funds that spend hundreds of millions of dollars to learn and figure that stuff out. And guess what? They're wrong all the time too. So what makes me think I'm going to understand it better than them? No, I'm just Homer Simpson sitting here. When the red light lights up, I hit the button, and whatever happens, like, I still go about my day, and it doesn't affect me from like a self-worth standpoint. I see a lot of people that attach their, you know, their emotional well-being to whatever the P&L was that day. Like, if they had a big red day for some reason, they're gonna, you know, yell at their kids, or, you know, they're not gonna enjoy their evening. For me, you know, I've been there too, right? Like, I was at one point, I did not have everything defined black and white for myself, and it was, you know, I a lot of anxiety, a lot of stress. You know, the seconds would be counting down for the bell to ring, and I would feel anxiety wash over. And it's from not knowing. It's like we talked about earlier, like that uncertainty. Is today going to be one of those days where I get smoked? And once you systematize everything and you take all those decision-making parts out of the equation and take out your self-worth or attachment to the outcome, there nowadays, when the bell's about to ring, literally smiling ear to ear, watching my scanners going like, bring me some opportunities, let me make my money, and then I'm going to go hit some golf balls. So that's definitely been the biggest change for me, was systematizing everything.
Yeah, it almost sounds like by systematizing everything, first of all, you're not like, there's no room for emotions or like irrational decision making. And so and also you're taking care a lot of what some traders call your mental capital, right? And no, that's a great approach. That's really interesting. And so yeah, we're starting to run a little bit out of time. So to wrap it up, what word of advice do you have for those developing traders who are coming up and are currently having a hard time in this market conditions?
Well, we just talked about this. I do like a Sunday prep every Sunday on YouTube. We live stream it. And like, I always do like a little intro where I try to talk more about psychological type stuff. And this week's topic was the 3 things I see like newer traders always struggle with. And the main 3 things is risk management, learning how to manage your risk, defining your system. And that doesn't mean you have to automate it or write an algorithm, but you need to define it. Somebody needs to ask you what you do for a living, you have like the 15-second elevator pitch. You got to be able to tell them. And if you can't explain it simply, then you probably don't understand it well enough yourself. And the third thing was just like sizing up systematically. A lot of newer traders are always trying to grow. They see Trader X on Twitter posting giant P&Ls, and they wonder why are they only making $100 a day? And it's like, well, you don't know how long they've been trading. You don't know the struggles they went through. You don't even know like their financial position. Maybe they came from money. Maybe their dad got them into trading. Who knows what it is, right? But you got to focus on yourself, and you got to understand that it's a marathon, not a sprint. So like, you shouldn't be in a rush to go from, like, a lot of newer traders are starting with these small accounts, right? 5K, 10K. Well, guess what? If you're starting with a $5,000 account, you shouldn't come to the market with the expectation that that's going to double in the first year. What you should be focused on is don't blow that $5,000 up, right? You need to give yourself the time to learn and make mistakes. And the only way you can do that is by mitigating risk and keeping your size systematic and size small enough that you're not going to blow up. So those are the 3 things I think the newer guys need to focus on.
Awesome. Yeah. And so, Ricky, where can listeners or viewers hear or watch more from you?
Like I said, I'm over at truetrader.net. I have a YouTube channel. Like I said, I got my start in the small caps. A lot of people might still know me from doing all the SEC filings. The YouTube channel is just Ricky Analog. I don't really put a lot of new content up there. I think, I covered the basics on how to dig through these small cap junk companies and find red flags. So if you guys want to learn that stuff, have at it. It's all out there for you. I'm on Twitter at Ricky Analog. I'm on Instagram at Ricky Analog, and I'm on Tradervue at Ricky Analog.
Awesome. Yeah, I mean, that's SEC files and how to dig deeper was one of the first things I saw from you. Nice. I did learn a lot from that, so thank you for that. And so, all right, Ricky, thank you so much for being here. It's been a pleasure, and I've really enjoyed this conversation, and we hope to have you next time here.
Awesome. I appreciate you having me on, man.
All right, take care. Thank you for listening to another episode of Tradervue Conversations. If you really enjoyed our content, please support us by giving us a thumbs up, sharing, and subscribing.